Good afternoon, or I should say good morning. This is Tom Alexander. This is the weekend video addendum to the report that I publish every week. All of you should be receiving notification of that report. It's on the website, alexandertrading.com. It's free. Look under weekend update. Also, one more housekeeping thing, and then we'll get into the markets. If you find value in this video, please subscribe to the channel. Please like it. It helps with all the algorithms and all these things, so that would be much appreciated. Now, I'm going to use a word here that is a word traders have a real difficult time with, and it's actually something that very few traders seem to be capable of doing. It's patience. We are coming into the stretch run of the third quarter. It has been a quarter, as I'll show you in just a minute, of extremely narrow trade that has gone net nowhere now for almost 3 months, 2.5 months. And we are increasingly likely to see some sort of sharp move of duration greater than 2 hours, as I put in the report. This is just, it's one of these times where there is a stasis between buyers and sellers. You can attribute all sorts of reasons to that. I'm a price action trader. I analyze and trade auction market principles. And there are times where you're always trying to identify market condition. And you can do that very accurately at times and still not necessarily benefit from it from a trading perspective. And this is one of those times because the market has been up 2 days, down a day, down another day, up, down, and we're trading at the middle of the range of the past 2.5 months now, and all 4 of the primary U.S. trading indices. Now, the good news is, and I'm going to show you the charts in just a minute. If we go down in time frame and get a little more granular, Friday's trade was interesting because we had a relatively wide range day. The indices closed near their lows for the day, and all the indices are at significant inflection points, suggesting a sharp move away from this area. Now, if we combine that information with the information we have from the quarterly perspective, which again, I'm going to show in just a minute, believe it or not, all this ties together, then the strategy going forward into next week and increasingly into the end of the month becomes clear. You want to be going with the initiative move. If there is a trend at any time frame in your trading, you don't want to be fading that trend because it's increasingly likely that trend is going to continue outside of a 5-minute, 30-minute, 60-minute day time frame. So let's take a look at the charts. And we're going to start with the S&P, the SPX, and you can see right here, this is where we closed on Friday. Oops, that's not what I wanted. Right here. Right near the midpoint in the high volume node of the auction for the third quarter. And then if we go, let's look at the NDX. Identical picture from a structural perspective, right at the midpoint of the range for the third quarter so far. And Mr. Russell, it has a little bit of a different perspective. Now, it's trading near the low extreme of its quarterly auction. I'm going to split this out, but you can see it's in this the low extreme, and it's at this inflection point. So, and again, I watch the Russell very closely. You're not going to have a ripping bull trend unless there's participation in the Russell, or you've never had one. Maybe this would be the first time, but if we do, it's the first time. Okay, here's the Dow. And you can see it is also, it's a little bit below the halfway point of the range, but you can see this, it's really close to a critical intermediate term inflection point. Now let's look at the daily charts. This is the SPX. And the levels, now these levels are on the report and are in the report that you can go to on the at the website allocatortrading.com, look up weekend update. But you can see we had wide range days to the downside on Friday, and we're close to or below, actually closed at very important inflection points in the day-to-day time frame. Now, if you add this information with the information I just showed you of the quarterly profiles, from the quarterly profile view, which we have one of the most narrow quarterly auctions working that I can recall, and it's a mature structure. The condition is balanced, and in terms of its maturity, it's quite mature. It's ready to break, increasingly likely to break one way or the other. You take that information, you go more granular to the daily time frame. You have a wide range down day on Friday. So we'll see. We'll probably find out in Globex pretty early. But this has the potential to continue sharply lower. Now, if the markets reverse yet again, and all four of the indices close above Thursday's high, you have to respect that, and that would imply a ripping move to the upside. So we're closer and closer to some sort of resolution to this day-to-day chop that we've seen in the indices for this quarter. All right, let's take a look at one last thing here that I like to use, and you guys that follow me know. All right, this is breadth. It's NYSE data, NYSE advancing and declining issues. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day, and the blue is the net close of NYSE minus advances minus declines. It's breadth. And from this chart, one thing that has not happened in quite a while is we have not had a negative 2000 breadth reading in months. That's overdue. Now, does it have to happen? No, we can actually go lower without it happening. But if it happens, it will be clarifying, and then we can get sort of an if-then scenario. Looking at this here, it really doesn't tell us a thing. The internals are going to break with price, or price is going to break with the internals. It's a chicken or egg thing. Which comes first? I don't know, but there's no big tell from this particular perspective. Okay, guys, let's have a good week. I'll speak with you again soon.